Hello and welcome back to All Things Money. I'm your host, David Blain. During today's show, we're talking about investing and something that I think will make you a better investor, and it's simply learning to have a positive outlook and not get weighed down by all the gloom and doom. We see a lot of people that their portfolios are a reflection of basically the world collapsing, and they miss opportunities left and right that are out there. You know, that the world has not collapsed since the financial crisis. There are problems, but to adopt this completely gloom and doom attitude is very harmful to your portfolio. And so we're talking about why that is and things that you can do to prevent that. So what we see is that there's maybe there's things that are a 10% chance of happening or 25% chance of happening out there that the media, and I don't want to just say the media, it's the financial industry, it's financial advisors, it's politicians, it's other people besides the media, have turned these 10% probability events, 25% probability events into 75% probability events, 90% probability events. If you ever listen to Warren Buffett, he's great. And one of the things that I learned from him that I follow is to look at life in a probabilistic manner, meaning, the probability of things happening, and you multiply that probability by the dollar effect of it happening, and then that helps you make a decision. So if there's a 1% chance of something happening that would cost you $1, or that would cost $100 if it happened, you multiply 1% times 100, so the expected outcome of that would be $1 loss. Something you probably don't want to spend a lot of time worrying about. And so we've seen that the media and politicians and people have created an atmosphere where the probability of these things happen seems like it's much higher than it is. And so people are making decisions based on this. So back to my premise is that you could do a lot for your portfolio, a lot for your financial outlook by learning how to look beyond some of the headlines and to take a realistic look at things and not let opportunities pass you by. So a couple of recent examples would be the Japanese tsunami, which was an awful event. And there were all these predictions about Japan. It was going to upset the entire world's supply chains and things that we're not going to recover from for decades. And the reality is it turned out to be a speed bump. I looked at something the other day about the Chernobyl reactor in the old Soviet Union. I don't know if you remember this or not, but they had that nuclear disaster and they had to evacuate the whole city, and it was a nuclear wasteland. Well, they actually sell tickets now. You can go visit the place, and it's all grown up. There are trees and different things growing all around it. It just didn't turn out to be the disaster. Now, I'm not advocating we start spilling nuclear waste all over the place. I'm just saying that there are examples that abound everywhere of where things did not turn out to be as bad as they initially seemed to be. Another example, a couple of times I've heard, these Asian bird flu scares, and that it's going to wipe out half of the population. We've had several of these come up. There's a great story or a good book called, it's by Nate Silver, and it's about predictions. I forget the name of the title off the top of my head, but it's a great book. It's a yellow book. You can't miss it. It's by Nate Silver, and he talks about why these bird flu and things like that, why these prediction models are flawed and why they keep predicting these disastrous circumstances that never happen. Other instances, if you look at the world since 1800, we've had the American Civil War, the Russian Revolution, Chinese purges, economic upheaval. There was a flu epidemic in 1918. We've had 2 world wars. During that time frame, the world population multiplied 6 times. The average life expectancy is more than double, and the real income over inflation has multiplied over 9 times. So within those, subsets of time, yes, there have been problems, there have been issues. Not everyone's not everyone's income has increased 9 times. We understand that there are issues, but in aggregate, those massive global changing events did not bring about the collapse of the world. If you go back to the 60s and 70s, well, actually all through time, I was reading the other day about some 60s and 70s predictors who were talking that the world population and rises, it would cause shortage of food, energy, and health care. There's this big Malthusian, I mean, there's still some of it today, but it seems like in the 60s and 70s there was this huge movement towards population control, and we're running out of resources, and that people really thought in the next 10 or 20 years that the world was going to sort of collapse under its own weight, and that the result would be rationing, starvation, stagnation of the whole human race. And despite that, the Vietnam War, the Gulf War, the dot-com bust, 9/11, the most recent Great Recession, we see that during that time frame, infant mortality has gone down by 1/3. The average human across the globe, yes, we still have starvation, but the average human consumes 1/3 more calories than they did in the 60s and 70s. Life expectancies increased over 1/3, and real income over inflation has multiplied another 3 times. And once again, I realize there are people that it has not increased that much, but in aggregate, as a society, they have. And of course, being an investment person, since 1950, the S&P 500, a measure of the stock market, has increased 9,649%, not counting dividends. I mean, that is hardly a disaster scenario. And so we want to help people try to look through these things, especially if you have a long time frame. Yes, if you're planning to spend your entire portfolio next year, you probably need to be a little bit more cautious. But if you're investing for a lifetime of retirement, if you're 60, you need to plan to live to at least 100. We had a client that came in the other day, 100 years old. His life insurance policy actually matured. I'd never seen that before. He had a whole life policy, and they said, hey, you reached 100, we're paying it out. Well, we're coming up on the second break. When we come back, we'll continue talking about having what a positive outlook, what effect that can have on your investment portfolio.